Guys, yesterday we saw massive moves in the traditional markets. You can see a big drop, big pump, and then another big drop. And I'm gonna talk about the reason why we saw this, because it seems like inflation may start to become a problem again. But actually, looking at the volatility yesterday, there is actually a big takeaway we need to think about from that when it comes to Bitcoin. So guys, today I'm gonna talk about that. Make sure to stick around from the beginning until the end. Welcome back everybody, my name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you're new to the channel, then make sure to subscribe and activate the bell right now. Okay, so let's get straight into it, guys. So what you can see is that we are still consolidating above the orange line. We did have a drop yesterday at the same time, I think, as the traditional markets saw a drop. Let's confirm that here in a little bit. But yeah, we have seen Bitcoin consolidate in between the range of 52,400 basically and the orange line at 51,500. So there is a rather big kind of selling wall up here. That's the reason why we're having so much trouble breaking through it. So there's a lot of Bitcoin holders that are, they have their sell orders probably since months and maybe even years away. They have had their sell orders right here, and now when finally Bitcoin has gone up here, it's having some trouble breaking through it. Now for me, guys, as you know, I think it's only a matter of time, but that is the reason why we are having some trouble breaking through this. And you have seen, just like I said yesterday, if you haven't watched my video yesterday, then make sure to go back and watch it, because in yesterday's video, I talked about a very significant pattern which you have seen the last few weeks. That pattern is that after a parabolic move, we usually come down, we make it support, the orange line makes support, and then usually towards the end of the consolidation, you either have a drop below it, and then you go up and close it, or you close below it as well. But usually at the end of the consolidation, you do have a drop, whether we close or not below it. That's it happens that we close below it. It happens also that we see a bounce before it closes, but a drop and then a big pump. So again, if you haven't watched my video yesterday, then go back and watch it. But you saw the same thing here. After this consolidation, a big drop and then a big bounce. Here, after this consolidation, a drop and then a bounce. Right here, after this consolidation, a drop and then a big bounce. So the question is, are we going to see that drop? Was this the drop? Well, it seems like it wasn't. This was just a regular drop, but not the drop we usually see before a big pump, because obviously we haven't seen that pump. But the takeaway is that as the traditional markets went down, and we can confirm this, the 16th of February at 11 a.m., so 16th, 11 a.m. Yeah, so it was this volatility right here. So while the traditional markets had a big drop, so this was pretty juicy, almost 1%, we went down. And the reason why we went down here for traditional markets, by the way, guys, is because, as you know, in yesterday's video, I said that the PPI data was going to come out. And compared to the other times when the PPI data usually comes out, this would be more significant, because people would be looking at this to confirm whether or not inflation is starting to become a problem again, because the last inflation data that came out was actually higher than expected. And yes, that is what happened also with the PPI. So the core PPI rose by 0.5%. The forecast was only 0.1. So it was pretty much 0.4% higher than expected. 400% higher than expected, actually. So 0.1 was 0.5. So that's actually 5 times as much as the forecast. So the PPI month over month, 0.3. So this was 3 times as much as the forecast. So this made the market panic. You saw this drop. And then what happened is that the Fed came out and said that we still believe that the inflation is trending back towards 2%. And so all of a sudden the market said, okay, then we're back. And boom, we saw a pump. And then ultimately we saw another drop here. So we did see some volatility. But the takeaway here for Bitcoin is that, look, we are still above this orange line. We didn't see, what we saw was just more consolidation. So this goes to show that compared to the traditional markets here, Bitcoin is still looking really, really strong. And you are seeing hundreds of millions of dollars worth of inflows, net inflow into the ETFs still. Yesterday, I think we saw 405 or 470 or something $1 million worth of inflows, net inflows to the ETFs. So people are still buying like crazy when it comes to ETFs. So bullish for Bitcoin, definitely still. But let's see if we can have that big drop here, maybe down to like 50, maybe even touch like, low $50,000, like 50,100, 50,200. Let's see if we can get that, and then maybe a pump like you have been seeing here recently. But honestly, I would not be surprised if the pullback is not as severe, like just something like this and then pump. So let's see, guys, if that is going to happen. But Bitcoin looks really, really bullish right now. And what I've been saying here recently as well is that I think that Bitcoin is due for some consolidation. So it's really nice to see Bitcoin consolidate for a little while longer and not just small consolidations and then big pumps, because I want Bitcoin to consolidate and create support levels over time as well. So that is all good, absolutely fantastic. For Ethereum, you can see that Ethereum went up to a very key level here at 2,850, my orange line. And then from this point, we met resistance and we have had a little bit of a pullback. But also Ethereum looks really, really well. Now, when it comes to the expectations, the inflation data came out yesterday and a couple of days ago. This has now told the market that we probably should not expect rate cuts too soon. So instead of expecting a rate cut in March, remember previously, most of the market was expecting a rate cut in March. Now, instead, the first rate cut is expected to be in June, which is fantastic, guys, because you want the market to have pessimistic expectations. You want the market to be pessimistic. So if the rate cuts are happening quicker than anticipated, then that is going to pump the market. But if the entire market is expecting a rate cut in March, and we do get a rate cut, well, then, it's just in line with expectations. There's no bullish surprise there. So you want the market to be pessimistic. So this is why it's absolutely fantastic that the market is now becoming more pessimistic, so that potentially we can have a beautiful surprise when the Fed finally starts to cut. Other than that, US banks are now starting to want to offer Bitcoin ETF services and also Bitcoin custody services. So as Bitcoin continues to stick around, it's been around now for, 15 years or so. And as it continues to gain momentum, and especially with the ETFs, banks are starting to try to get a piece of this. And this is absolutely fantastic that we have front-run all of these people. We front-run the traditionals or like the institutional traditional markets. We front-ran also the banks. So that is absolutely fantastic. But guys, that is really what I got for you today in this video. Thank you so much for watching it, and I will see you in the next one.